all right, mate. Yeah, ERG, nice one. You're mining this, yeah, very good. The thing is, I do like your target, the 150 level. I mean, I think it'll get down there at some point. Where's the 150 level? Yeah, I mean that's just at the lows. Yeah, okay, 160 there. It looks to be forming a large weekly sort of pressure cooker where I might not have drew that very well at all, but you know, dips down here, wherever it dips down to can be buys. Doesn't mean it dip it down to zero, but you know, it'll likely form. This will likely be a range. Let's do that again. You can already see this range here, and the bottom end of the range is probably, you know, somewhere in there. So when you do have a range, it's likely to come down and stop hunt the low end of the range somewhere, and once you stop hunt or come down below the low end of the range, it's then more likely to come up and stop hunt the top end of the range, or maybe not a stop hunt, maybe it's the real bull market by that time, depending on how long this base is for. But the pressure cooker on a weekly chart is developing here. We only have to look at it's not a great example actually, but ETH on a weekly, you know, back here, if you can see, you know, this also dropped 94%, and it almost, I'm not saying it looks identical. So if we just compare the two of them here, you can kind of see the structure of the chart. Of course, ETH is a bigger coin, bit larger market cap and all that sort of stuff. So it never actually came back down to new lows. It got that first low and then kind of built out that pattern and then moved up. Smaller coins usually take out the lows again. They usually do take out the lows again. So I do like your targets to 150, wherever that is down there, and build out this base here a little bit like the way Ethereum built out the base here in this sort of pressure cooker. And this becomes a large pressure cooker that breaks out of that and runs. But you can see when the red 200 weekly moving average formed on the chart, well, this is when we actually, well, the bottom was here, but this was basically the bottom when we moved up. The red 200 moving average formed on the chart indicates and alerts institutions and hedge funds that then the price can run. Now there's reasons for that, and obviously they have tracking indicators on the red 200 moving average. It's a master moving average, and also the low-lying nature of the red 200 moving average. Any move above it and you're above the red 200 weekly moving average, which is very powerful, and then you can run. I will go out on a limb here and say that this will consolidate the same. It'll be another year of consolidation here. I could be wrong on that, but a year's consolidation here, as you can see from here, you know, the red 200 moving average forms on the chart there, red 200 moving average forms on the chart here, consolidation and moon. Okay, so something very similar. So if you do get low-lying bids, you know, at $1.50 or even less, small bids even right now is okay, but be prepared, because this is a smaller coin. Smaller coins can eventually go lower. So I like it. You know, just look at the Ethereum chart. Good structure. It's going to take time. It's going to it needs time to develop, but yeah. But I do like your 150 down cost average, and in that area looks very good to me.